Welcome to our daily Bitcoin update, where we share our short format summary of market perspectives and trading strategies. We are a team of investment professionals with decades of experience in traditional finance. Our careers span roles as traders, market makers, and portfolio managers for top-tier institutions, having transitioned to proprietary traders of digital assets. We have developed a proprietary methodology combining qualitative and quantitative factors, merging a multitude of theoretical constructs from traditional finance and technical analysis. Our methodology translates how the pricing mechanism is influenced by market maker predatory tactics and trading algorithms, with a focus on market structure, liquidity, volatility, and time-price volume relationships. Please note, our content is not investment advice, or is this an educational channel. It is intended for entertainment purposes only. We have no affiliations to exchanges or paid sponsors. If you suffer from analysis paralysis and prefer short format market perspectives and rationale for our trade setups, stay tuned and enjoy. In this update, we will first discuss Bitcoin local price action, market structure and technical levels, longer-term price targets, the market backdrop and event risks, and close with our model's translation of these investment implications to our trading strategy. Bitcoin local corrective price action persists, and the average daily trading range has been contracting in recent sessions. Price in recent sessions has been driven primarily by liquidity seeking, with volumes and momentum too timid for continuation beyond the 66.5k-68.5k range. Locally, bullish market structure remains intact, and we remain biased to higher price, provided Bitcoin remains above our invalidation level of 65.4k going into the weekend. Levels to the downside, we expect a reaction for corrective price action and resumption of trend higher are 67.4k and 65.8k. Zooming out, the highest concentration of liquidity resides between 70k-72k and to the downside 61.5k, which will function as magnets for longer-term price action, and to which the next positive or negative catalyst will likely determine the order in which these will be successively tapped. The market backdrop remains supportive, with ETF flows net positive for 5 consecutive sessions. Sentiment indicators such as the crypto greed and fear index firmly in greed territory, near all-time highs in futures open interest. On-chain metrics such as whale address ratio of exchange withdrawals to deposits below 0.5, and an increasingly positive call-put ratio in Bitcoin options markets. This being said, in the absence of a negative catalyst, we see probabilities in favor of continuation higher to liquidity in closer proximity at 70-72k, where liquidations could accelerate the ascent to a new ATF. As a caveat, some of the aforementioned indications, namely leverage and open interest, simultaneously make price susceptible to deeper market corrections. Additional caution is warranted due to leveraged positions currently axed net long. Thus, we will be closely monitoring time-price volume metrics and indications of absorption or distribution at key levels 69.6k and 72k for signs of a failed auction and predatory market maker behavior subsequently driving price to the downside. Looking forward, the most significant foreseeable potential catalysts for trajectory of price are the US presidential election and ever-present geopolitical risks. Currently, the market is pricing in higher probability of a Trump victory, the odds of which has been strongly positively correlated to recent price developments in risk assets. Volatility markets also reflect this event risk, with the implied volatility term structure elevated in November and longer option expiries. Going into the weekend, the potential for a new flashpoint in the Middle East is non-zero probability. Going into the coming week, earnings season and Bitcoin's positive correlation to equity prices could also provide a headwind or tailwind to price action. In terms of strategy, our model translates aforementioned investment implications to a long bias. Levels to which we may initiate additional long exposure in today's session are 67.4ka, 65.8k. Our take profit targets are 69.6k and 72k. As we express our strategies via options and futures, we will increase our delta positive at targeted levels to the downside and reducing delta towards zero at TP levels. Given the balance of risks, we are conservatively positioned with respect to leverage and have implemented option structures to hedge our capital from left-tail risks. As always, do your own research and analysis. Be safe, and good luck in trading.